Karthik, let me start by setting some context around the category itself. Investors today have several choices across large caps, mid caps, small caps, and flexi cap strategies. In that context, could you help us understand multi cap as a strategy and where it fits into an investor's portfolio?
Yeah, yeah. Thanks for the question, Sonal. So first, I'll talk about this from the UTI multicaps prism, or the way we look at it. So we call it the three S. The first S being style, which Vetri just mentioned that in the last 5 years we have seen value has outperformed quality. But there is always an alternating trend. Few years quality does well, and few years value does well. That's what we are seeing on the left-hand side. If we look at on the right-hand side, even on a monthly basis, there is change in the strategy that is working, whether it is quality or value. So as far as the multi-cap category is concerned, there is opportunity both on quality and value side. We will talk about that more in the subsequent slides. The second S being the sector. Again, if we look at for a pure large cap, the opportunity is a lot more in, say, private or PSU banks or oil and gas or auto OEMs. Whereas if you look at, say, capital markets or consumer durables or capital goods, there is a lot more opportunity in mid and small caps and not so much in large caps, because many of these companies are in the mid and small cap space. So for a pure large cap or a pure mid cap or a pure small cap fund manager, it is difficult for them to kind of participate in all sectors or subsectors. Whereas in a diversified category like multi-cap, there is opportunity to invest in any large, mid or small sector or a subsector. Now coming to the third S, which is the size. If we look at some of the other diversified comparable strategies, a strategy like FlexiCap, the actual funds holdings, if we look at, close to 60% is in large caps and about 40% is in mid and small caps. If we take that number for large and mid, it is 46 and 41, but small caps is far lower there. Whereas in a category like multi-cap, the average holding is almost 39% in large caps and 29 in mid caps and 32 in small cap. The point being that compared to other diversified funds, the exposure to both small caps and mid caps is higher in the multi-cap category. So that's where it is differentiated compared to a flexi cap or a large and mid category as such. So these are the three S's, which is style, size, and sector.
Thanks, Karthik. That's a helpful perspective on the category. Investors also want to understand how such a strategy holds up over a longer periods of time and across different market environments. How does the returns and risk of multi-cap strategy compare versus broader categories such as flexi-cap?
Right. So when we look at this is the 3-year average rolling returns based on last 18, 19 years of data that we have. So based on that, these are all index returns. What we see is the large caps have lower volatility and lower returns. A flexi cap is somewhere closer to that. Multi-cap is the next, and mid and small caps have higher volatility and higher returns. Mid caps clearly has the highest returns, and volatility wise, probably it is slightly lower than small caps. So the point is that diversified category somehow is able to maximize both on the risks and the returns metrics. So it sits somewhere in the middle, trying to reduce the volatility or the risk, at the same time kind of giving returns better than pure large cap and slightly better than flexi cap as well. Now, if we come to the returns on a calendar year basis, 19 years data suggests that again the multi-cap index outperforms the NSE 500, which is the index for flexi cap, 12 out of 19 times. So, and you could clearly see that years when the markets do well, the mid and small caps outperform, and multi-cap, because of its higher exposure to mid and small cap, it tends to outperform the NSE 500. So to that extent, it gives that extra returns, which we can see in the subsequent slides. Even on a 3-year or a 5-year rolling returns basis, the average returns from the NSE 500 multi-cap index versus NSE 500 index is about close to 1.5%. It obviously comes with higher volatility because of the same higher exposure to mid and small caps. So on a risk-adjusted returns, maybe it is comparable with the flexi cap category, but on an absolute return basis, it tends to have higher returns over a longer period of time. And that is same reflected from a cumulative returns perspective as well. 10 lakh rupee invested can almost return 21x in the 20-year period in multi-cap category, while the same number would be around 16 odd x in a pure Nifty 500 or a flexi cap category. Just that multi-cap, because of higher mid and small caps, tends to have higher returns, obviously with higher volatility, because of which an investor needs to have a little longer horizon and higher risk appetite as far as the category is concerned.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.